Welcome to the Wealth Guide podcast. Today we are honoured to have Anja Pannek, CEO of the Mortgage and Finance Association of Australia, or MFAA, as our special guest. With mortgage brokers now responsible for over 70% of all new home loans, the industry is experiencing unprecedented growth. In this episode, Anja will share her expert insights on why borrowers are increasingly turning to brokers and the critical role brokers play in boosting financial literacy for Australians. We will also explore how the MFAA supports brokers in these efforts and discuss the current home ownership initiatives that are shaping the Australian housing market. Finally, we'll dive into the Senate inquiry aimed at improving access to home ownership and the part the MFAA plays in advocating for meaningful changes. So without any further ado, let's dive into today's episode. Okay. Hi, Anja. Thank you so much for joining us. Really appreciate it. Anja, first question I really wanted to ask you was around, we've seen significant growth to over 70% market share for mortgage brokers in particular. I was wondering if you could detail a little bit about why you feel we've seen such significant growth and drive towards the mortgage broking sector.
Yes, absolutely. And Gianni, thank you very much to you and Ray for having me here today. It's fantastic to be back. So I think when we think about what we've seen is really phenomenal growth in mortgage broker market share, it's really important to come back to what's at the DNA of the mortgage broking industry, and that's the client and the customer. If you think about the mortgage broker value proposition, that's the language I use, it's really about providing support and guidance to, a prospective home buyer, someone who really wants to make that step in or upgrade or investment into buying a home, regardless of where they are in their home buying journey. The thing that's also really important to note when it comes to mortgage broking is that the industry provides transparency in what is a very complex market. Financial literacy is, and I know we'll touch on this in a little while, it is actually very low across this country. And when you're, thinking about buying your first new home and you actually need to understand a whole lot of different things, how do you go about doing that? You can do your own research, or you can go and see an expert, you can get guidance. And the guidance goes beyond just here's a loan you should think about. The other thing I think that's really important to note is that the mortgage broking industry has just taken on and stepped up to the challenge when it comes to embedding regulation. A consumer can be very confident about their mortgage broker working in their best interests, and that's something an Australian only gets when they go and see a mortgage broker. You don't get that anywhere else. That provides, high levels of consumer protection coupled with responsible lending and all the other regulation that mortgage brokers operate in. And I think if you think about it, that really translates through to the trust we've seen with increasing market share as well. So yeah, I really put it down to the value proposition, regulation, transparency, the choice that mortgage brokers provide, the very personal service as well. And importantly, they drive competition. Yeah. They drive competition, and competition benefits consumers and borrowers and, I'd say the whole mortgage lending market in Australia.
Yeah, I think that's very important because there were a few points that you touched on that really resonated with me in particular. And that's number one is transparency, and then the value proposition that a mortgage broker provides as well. And I feel that plays into the relationship between a financial planner and a mortgage broker as well, around the transparency and financial literacy and the relationship that's had as well. Ray, is that similar, or how does a financial planner support that relationship between mortgage broking client and their client as well?
Gianni, so we look at from a very granular perspective, because when we're working with some of the brokering firms, what we try to create is the advocacy piece with the brokers. So how do we sort of create a good variety of service offering for the customers that's walking through the door? Now, essentially, what it does is when we've worked with this particular firm, when we started to talk about tax minimisation strategies, estate planning, superannuation insurances, these services were so large at the level that the customers were looking to sort of take on these services. And what it did was essentially, when we look at some of the tax planning strategies, it created a bit of an advocacy piece that our brokers allowed to provide advice on these aspects. And what we saw was all of a sudden this brokerage firm had influx of customers coming in going, our brokers does this. Our broker can help us with tax minimization strategies. They can help us with estate planning. They can help us with all the wide variety of services that we are after, because consumers are very busy these days.
Yeah, 100%. And I feel that's part of the difference that a mortgage broker will make is they'll identify needs for the client and place them in a better situation as part of their best interest duty as well. What other factors, Anja, do you think are most influential in mortgage brokers being the preferred choice for borrowers in general?
I'd like to sum it up by the 4 C's. You know, I'm an accountant by background. I love, sort of tightness and simplicity in terms of explaining things. And I'd put that really down to choice, competition, consumer protections, and customer centricity. Mortgage broking is a referral-based business, and we know that, and I can speak personally, the experience that I've had with my mortgage broker has been fantastic. Whenever anyone asks me if they're looking for a particular mortgage broker that, helps them in a similar way to how my mortgage broker helped me, I don't hesitate to refer them on. So just the experience that the mortgage broker creates, the choice, I just mentioned transparency. So most mortgage brokers, there's over 100 lenders in the Australian mortgage market, and every individual borrower is very unique. A mortgage broker takes the time to understand the specific needs, the requirements of that individual. It's a very individual process and in and around guidance. And then they can go to, typically most brokers are accredited with 30 to 40 lenders. And then they can work to identify, based on understanding the client's needs, which of those lenders and products are really in the best interest of their client. So, that's real choice. You only get that choice if you go to a mortgage broker. The transparency that brings as well goes beyond price. Is typically a factor a lot of people sort of go to with mortgages. And I think given we're in a cost of living crisis, it is a really important factor for Australians. And also because your mortgage is typically the largest part of your household budget. But what we believe is that mortgage brokers drive competition not only just across lenders and on behalf of their clients, but they actually drive competition across the whole mortgage market. Yes, it comes to price, but it also comes to innovation and service levels. A client will come in and say, look, I've, for example, I found a new investment property. I need an answer, or I want to get my pre-approval to go out on the weekend. The lenders that meet those needs, the broker is immediately able to talk about that offering with their client. So it's not just price, it's product features, service levels, and really how lenders are adapting to the service needs of clients that come through brokers. So I think that's choice, competition, the consumer protection. We need to continue talking about that because it's just so important. And then this customer centricity as well. I always reflect on, it doesn't matter where you are as a potential borrower in your home buying journey. If you're first homeowner, if you're looking to upgrade, if you're looking to refinance, even if you're a pretty mature property investor, the thing is your needs shift and a broker can meet your needs at various stages in that process as well. And I know, Ray, no doubt you see this as well when you look at people from a financial planning perspective. Their needs vary through the life, their financial, their life cycle as well. And the wonderful thing is that the mortgage broker value proposition can meet that because it's an individual proposition based on what the client needs at that point in time.
And I think to your point, Anja, I think it's fantastic because I think having that access to knowledge at a mortgage broker level, when they can sort of see a client's life stage to go, as they're progressing through different life stages, they can work out, well, this is some of the services that are really going to add value to your situation. So having that expertise, being able to access to multiple lenders, like Anja said, that knowledge and transparency, and then essentially being able to negotiate with the lenders and variety of service offering, I reckon that'd be, some of the factors there.
Yeah, perfect. Yeah, because there are a lot of synergies between financial planning and mortgage broking because, number one, the customer is always centric. We revolve around the customer, and we really need to truly understand the customer's needs and wants as well. And then ultimately, we talked about it, like ultimately, what is the value that a mortgage broker provides as well? Because, why do they come to a mortgage broker? Why don't they review? It sounds silly when you say it out loud. Why don't they review 30 or 40 lenders and however many products each of those lenders have? So again, I really feel that there's a lot of synergies between mortgage broking and financial planning, especially. We've touched on this a little bit already, but what role do you feel mortgage brokers have in financial literacy and, educating their client around, how to go about purchasing a home or going for a home loan or putting themselves in a better position?
I think the role is significant. If you talk about moments of financial truth for an individual, going to buy a home is a real moment of truth. What our members find is that, and we're seeing this increasingly actually in terms of part of the value proposition offering is working with clients much earlier in their home buying journey. So if you are a first homeowner, and I think that's really where financial literacy and how mortgage brokers, our members, work with their clients shines through. Many people come to the market looking to buy a home. You have to get finance to buy a home in Australia.
Yeah.
You're sort of at the other end of ultra wealthy if you can go and buy a home with cash. We know it does happen in this country, but for the vast majority of Australians, you need to borrow money. And what our members find is that some of those basic aspects of financial literacy are not only, not there with their clients. This is actually quite scary, but some recent research by Hilda looking at financial literacy found that financial literacy is actually declining amongst the younger demographic in Australia as well. So what our brokers do is they, first of all, what is a loan? What are the features of a loan? What do you need to do to put yourself in a position based on your spending and saving to even get to the starting gate so a lender will start to look at you. Yeah. That lack of financial literacy also plays through with what we find is a lack of awareness about how decisions which might seem quite normal, often what we call lifestyle decisions, have an impact when it comes to your borrowing capacity and how lenders look at you. Buy now, pay later. And what we've also seen is escalation in terms of buy now, pay later, and not actually realising that lenders will look at that and make some decisions around, how will you perform in your mortgage on a go-forward basis as well? That's one example. In our recent refinancing and mortgage stress survey, we went out to our members and said, where are you seeing financial stress? And they're actually seeing many more instances of lifestyle choices where people are unaware of what's happening. Yeah. So brokers are working with their clients to actually help educate them. Where can you budget? Where can you do things differently? Yeah. How do you put yourself in the best possible position to, first of all, be finance ready? And sometimes that can be a journey that could take 2 or 3 years. And then when it comes to refinance ready. The other thing coming down to home loan affordability in Australia, the biggest challenge for most people is the deposit. We think about increasing house prices across the country. How do you get in? Now, there is a myriad of ways to get into the home loan market, and many people don't know about them. Yeah. And they range from, what are the pros and cons of getting LMI? Do I go with a home guarantee scheme? Yeah. Do I go with the bank of mum and dad? There is even, a not well-known scheme where people can save in their super for their home. Yeah. So what a broker does is they can actually unpack all of this and provide a variety of different mechanisms, as well as what we're seeing, which I think is really exciting, is commercial product solutions at sort of the 2%. Some of them are state funded, and some of the are commercial funded as well, but 2% or 5% second mortgages. So there's a lot of options out there, and in my mind, that's where financial literacy goes all the way through to as well.
Yeah, 100%. You're right. There are a lot of options out there to get into the market that people just aren't aware of, and it is a case of financial literacy, increasing the financial literacy of everyday Australians. Because I But I don't feel it's at a level where people can manage their money. Like the average person can't manage their finances effectively to be able to do these things themselves. And we see it a lot in financial planning circles around, educating people around the options available even before they go to apply for a loan, when they're starting to build their deposit. What are some of the things that a financial planner can do to educate people and increase their financial literacy around how to build a deposit and get into the housing market?
I think, Johnny, the way we work through with our brokers is, again, it comes down to the financial literacy, right? So when customers are coming to the broker, they expect their broker to sort of be able to provide myriad of solutions. So essentially what we've done is with the brokers that we work with, we have provided significant amount of time and effort to educate them. Because ultimately it's a flow-on effect. The educated the broker is, the educated the customer is, right? So to the Anja's point, with the first home super saver scheme, most of the brokers were unaware of the fact that client can salary sacrifice a bit of their money into super fund, essentially allows them to build up a deposit. And that was a significant piece that we worked with them, which allowed them not only to sort of secure the clients because the brokers helped them sort of through that part of the journey, but also be able to sort of going, Mr. Client, you can use some of your tax money to use that as a deposit. And that was quite a significant impact. But not only that, I think the second part was working with some of the clients around the tax strategies. So one of the clients that we work in this brokerage were, they worked for Google. They had $200,000 worth of shares that were coming off vesting. They were also tickering around the strategy that they want to sell the investment property. Now, the broker identified going, well, look, I've sort of done a bit of training with my advisor. I think might not be the best time to do this. So even if you delay this by another 6 months, you might be able to take some of the CGT strategies that might be really beneficial. When we sort of did the bit of workshop with the broker and sat down with the client, it was going to have a significant impact. So we delayed the property settlement for 6 months, and when the client was to sell that property, they almost saved around $50,000 each in CGT bill.
Yeah,
which is quite significant.
That was a great outcome.
And essentially, that's why the education piece is so important.
And I feel as well, people need to understand is you have to get into the market quicker because house prices are moving at a rate that is beyond people's savings capabilities as well. Yeah. So if anything, that goes to the part of how a financial planner and mortgage broker can work together to increase the financial literacy of their mutual clients as well. Yeah.
I think that really came through strongly in the government's intergenerational report that was released in 2023. Not so much in terms of house prices keep increasing. I know that we'll talk about that in a little bit, but this really high correlation between financial security and being in your home as you age. So, taking proactive steps towards that is really important, and understanding what you need to do to put yourself in the best possible position.
And we're even seeing that in a building demographic area. I know from talking to real estate agents and auctioneers and a few other investors that the actual dwelling types are changing to be more intergenerational, so that children, parents and grandparents can all reside in the same dwelling as well. And I think that's a sign of the times that we're in, around the cost of housing and getting into the market and a few other bits and pieces as well. Today's episode of the Wealth Guide podcast is proudly sponsored by Ryker Capital. In a world full of financial uncertainties, Ryker Capital understand the importance of safeguarding your lifestyle and the well-being of your loved ones. That's why we're committed to providing you with personally tailored insurance plans and financial advice that aligns with your unique needs and goals. Ryker Capital is your guide in the complex world of superannuation and retirement planning. Our team of experts are dedicated to helping you navigate these complexities with ease and confidence. We're here to empower you with the knowledge and strategies you need to build wealth and secure your future. At Ryker Capital, we offer a comprehensive range of services designed to optimize your superannuation. We work closely with you to determine the best contribution strategy, regularly review your superannuation fund, set achievable financial goals. Our coaching and consulting services ensure your financial plan stays on track with regular reviews to adjust to your changing circumstances and aspirations. Don't leave your financial future to chance. Take control today with Ryker Capital. Contact us for an obligation-free discussion about your financial plan by calling us on 1300 179 537. Let us help you secure your finances because you deserve it. Ryker Capital, your trusted partner in financial success. But I wanted to move on to, we've talked about how mortgage brokers and financial planners can assist in increasing the financial literacy of everyday Australians. How does the MFAA help to support these initiatives and this drive to increase financial literacy?
So we do it in a twofold manner. Firstly, it's around the resources that we provide through to our members. And then secondly, it's around really elevating consumer awareness around why they need to see a broker. So the fact of the matter is many of our members, just in the ordinary course of what they do, focus on financial literacy as part of that journey, understanding their client and their client needs. What we've done in the last 6 to 9 months is also upgraded and developed a suite of financial resources that they're fun and they're engaging and they're really age appropriate, where our members can work in their local communities and also schools and start that journey with financial literacy. They're very easy to use resources. They can have those conversations. And I've spoken to quite a few of our members who've used that. Yeah. One of our members who's Victorian based actually used those resources and her focus is females who are new immigrants to Australia. And how does she develop their financial literacy as well to really upskill them? So the resources have proven to be multifaceted overall in terms of helping Australians. When it comes to consumer awareness, over the last 18 months, what we've also doubled down at the MFAA with is our consumer campaign. We're actually live at the moment with our third digital consumer campaign. We're on, digital platforms that consumers typically go to when they're trying to understand, how do I find out more about finance for my home, and also on news blogs and the rest. Our last campaigns reached over 4.1 million impressions.
Wow.
And early indications, I won't give too much away just yet because we'll be able to report on it in due course, but we're getting fantastic cut through. What's really important with that campaign is, yes, it's about raising consumer awareness, but it's also about letting consumers know you can go to someone you can trust, someone who has experience. You can go to an MFAA broker and, by the way, just click here and you can find someone in your local suburb and you can have a conversation with them as well. So it's not just awareness, there's a clear action that the consumer can take to be connected.
And what a fantastic initiative. I think that was from, Niti Bhargava. She did a fantastic job with that. And I looked at some of the stuff that she's done. She's quite incredible as a broker, and the amount of work that she's done within her local community, specifically, I think Indian migration community. It's been quite phenomenal.
That's it's so important as well to have a source of truth in the community as well, especially in this age of social media and emerging technology and AI. A lot of people will, use whatever social media tools they have, and they might believe a finfluencer, or they might go into an AI and say, I want to buy a house, and that might not necessarily be information that's accurate for them, but it's good to have a source of truth from a trusted person that has consumer protections in place to benefit the member as well and have them support their clients. So that's really good to hear as well. We touched a little bit on some of the home ownership initiatives that are available, the low cost of entry, low deposit schemes. How effective do you feel these ownership structures are, or these ownership initiatives are, at getting everyday Australians into property ownership? If we take a step back, we are in a position where home ownership is increasingly challenged for most Australians. There are multiple issues for how we got into this position. Every day you pick up the paper, you will read that this is a focus for multiple levels of government. Obviously, we've got a rental crisis. So at the end of the day, we have a housing shortage. We've got a cost of living crisis. We're not putting enough supply on. We've had a really large increase in terms of more future Australians moving to the country as well. So that, coupled with something you don't really expect when the RBA moves successively with the cash rate, I think the limited supply has just caused property prices to increase. So I think this is a key focus for government at all levels as well, in terms of what needs to happen. The schemes such as, home guarantee schemes, state-based schemes, the Help to Buy scheme, that's
being this week debated as well before the Senate in terms of whether or not it'll be introduced. All of these schemes go to addressing that really critical challenge that new homeowners have, which is how do I get that deposit? I think if you wind back, I think between late 1990s and 2020, home ownership across Australia actually declined. It went from something like 77% per the ABS down to 66%. When you look at that by demographic, what's really exacerbated is the younger age cohorts. You really see home ownership has declined quite dramatically between like 25, 29, 30 to 38 overall. And I think it's this sort of combination of escalating property prices and then how do I balance all of this and save for 4, 5, 6 years.
Yeah.
The guarantee schemes, and there's quite some wonderful analysis done around this, show that it reduces the amount of time it takes to save that home deposit. In some instances can halve it. And then it goes back to, well, the sooner I can get in to my home, the sooner I can start paying it off as well. So I think those schemes are critically important. And that's why I've been saying this a lot lately. I think anyone who is thinking about buying a home at some point, and it's not now, it's not when you're out looking at the property. If you're thinking about buying a house in the next 2 to 3 years, you should go and see a mortgage broker and say, actually, how do I go about this? What should I be setting myself up for? What would you recommend? Start that conversation now so you can be as ready as possible. And there may be schemes that can get you in sooner.
Yeah.
And this is how you connect and get that understanding.
Yeah, because often I think it's the preparation is more important than the purpose as well. So like you said, 2 or 3 years ahead, go see a mortgage broker and even go see a financial planner about, how you can get into these schemes or put you in the best position or how you can make your application look good on paper as well.
And in reality.
But the more well equipped they are with, budgeting, I think that's the key important part because obviously lenders want to see a bit of a track record, don't they? And coupled with some of the good schemes that are available, they can definitely take advantage of it and sort of put themselves a couple of years ahead of that purchase.
Now, there's a Senate inquiry that's coming up, and I know the MFAA are putting together a submission on the Senate inquiry. If anything, can you tell us a little bit about the Senate inquiry and the MFAA's submission?
Yes, yeah. So the Senate inquiry is looking at the financial regulatory settings and home ownership. When we look at the position that we find ourselves in Australia with a housing crisis, what could the government consider to look at shifts in regulation and policy settings? So, there's a variety of different things that we'll be looking at and engaging prior to the inquiry, highlighting in our submission, as well as most likely appearing before the inquiry as well. So I think one of the things we find in the current environment is the serviceability buffer, APRA's serviceability buffer for ADIs. So approved deposit-taking institutions that do mortgage lending in Australia. I mentioned before our refinancing and mortgage stress survey. What we found in terms of talking to mortgage brokers is the serviceability buffer of 3%, which gets applied on top of a new borrower's interest rate, is actually stopping people refinancing.
Right.
And we are, we think that is a good opportunity to look at that. It's a very blunt instrument.
Right.
When you look at responsible lending is a principle-based law as well that affords consumer protections that allows lenders and brokers to really consider, what's appropriate for the individual. Now, APRA have some very, very clear guidelines around maintaining the financial stability of Australia. Some of the ideas that we're tossing around and that are being spoken about across industry now is, should we consider something like a counter-cyclical buffer?
Right.
That's one of the things that might be more appropriate depending on where we are in a tightening cycle or a reducing cycle. We spoke before around government schemes and incentives. So I think the nature and type of arrangements, if that's debt and equity by government, state and federal, and how that can work. And also in a way that what we've seen in the past is sometimes government will initiate schemes. It actually causes pressure on the housing market because a lot of people rush to get in and we see prices increase. So are there different ways of doing those schemes? I think there's broader conversations to be had around, involvement of corporate and institutional funds, super funds and investment in housing more generally, and also social housing. And something I think we really need to lean into as a country, which is the tax treatment and the tax inhibitors in terms of movement of property in Australia, both getting into property. I had a stat the other day. Sometimes it can be like, 20-30% of the purchase price of a house or the deposit can actually go into those upfront costs of buying a property. Yeah. And then what are the tax settings at the other end to try and free up real estate when people want to downsize? Are there other considerations there as well? So, I think there are multiple settings that can be looked at. The way that we're viewing this at the MFAA is this could be a once in a 5-10 year opportunity to put our members' views forward on the regulatory settings that can make it easier for homeowners. Our members' voice has got to be at the table. More than 70% of Australians go and see a broker. This channel is only going to grow in terms of helping Australians. So it's really, really important that their view is on the table.
And in terms of the MFAA's part in the inquiry, I know you mentioned that it's likely that you'll appear at the inquiry and you'll be putting together a submission. What else is the MFAA's role in this inquiry, if any?
We are really gathering the voice of our members. When I talk to regulators and government, they are always incredibly keen to hear the views of our members because it's real grassroots. It's almost like what's happening in the community, what's happening with home lending, how are borrowers faring. This is another opportunity for us to bring those views and put them straight on the table. They see the challenges. They have to navigate the complexities if it comes to I mentioned the APRA serviceability buffer. There are hard measures with the serviceability buffer. It's actually stopping people. We need to shine the light on that and provide real case studies and also solutions. This is a conversation that is not just let's bring the problem. It's where are there solutions and opportunities to do things differently. The other thing I think that's really important is that we showcase the critical role that mortgage brokers play in this country. Through choice, through competition, through consumer protection, through financial literacy. I think there's a really big case through the Senate inquiry. What can we do around financial literacy earlier, either in the education system, to help people understand what they need to do to put themselves in the best possible position? And then seek out experts, seek out their mortgage broker, seek out a financial planner to help set them up for success. So, there are a number of different policy settings that we'll lean into. We've gone out with a survey to all of our members and, I think we've had over 200 very in-depth responses to gather those ideas. So, and I'll be talking about that more once our submission is complete.
Interestingly, my daughter's school, we had a great, fantastic financial literacy program that started to really talk about mortgages, talking about different structures of it. And all of a sudden, Mia just comes at home. She goes, "Daddy, what's a LMI? It does not make any sense to me." So I started sort of explaining a lot of those, some of those acronyms. But it's a good thing because at least they're starting to get used to the conversation, getting used to the understanding of what they need to do at a very young age. And I think starting at a school level, I think it's a fantastic idea if that financial literacy can happen.
Funny story, I used to put my kids to sleep by telling them about the statement of advice documents I would write during the day. So they're sick of my financial literacy talk, if anything. I
don't know who passed out first, Jamie. I don't know whether it be me or the kids first.
But look, a big advocate of financial literacy. And I think it's very important that the MFA raise the voice of their members to that Senate inquiry as well. We talked a little bit off air about some of the learnings that you've taken away from other countries that are facing similar problems. I was hoping you could describe a little bit about that.
Very recently, I've spoken with our counterpart association in Canada, and I think it was a bit of a reality check. Canada is facing very similar problems when it comes to housing affordability and supply. As we are here in Australia. Culturally, very similar. The broker market is actually quite different in Canada. There's state-based regulation. They've got different levels of qualifications for brokers in Canada, actually, which are opt-in. It's very much administered at the state-based level. But very similar conversation around how does the country face into further access to housing, as they see access to housing should be a basic right for Canadians. Also, when we look more broadly, the UK is another market. 90% of mortgages in the UK are facilitated by brokers. And again, culturally very similar to Australia. Mortgage broker remuneration is a little bit different over there. It's interesting when you see at the steps that they're taking to look at access to housing and solving some of the barriers end to end. So from what I understand is that they've set up effectively almost like a cross-system consultancy body to look at everything from planning at the local equivalent of our council level to, more state, our equivalent, and federal. How do they ease planning challenges and restrictions overall, density issues? And then likewise, I think if we bring that back to Australia, there could be a really big opportunity to have this national, very coordinated conversation.
Yeah.
If we look in our industry, and a classic example of being just completely uncoordinated when it comes to state and federal and even within a state, is the issue that the mortgage broking industry is facing into with the application of payroll tax.
Yeah.
So we've got the New South Wales government who is saying, I think just this morning it came out that the New South Wales Productivity Commission will today announce initiatives to look at planning and housing for New South Wales. I think that's fantastic.
Yeah.
But then we've got another part of the New South Wales government, their Treasury Department, that's looking to apply a tax to the industry, which will reduce the amount of brokers that are in industry. Brokers are essential to helping New South Wales people get into the home loan market.
Yeah.
So in my mind, it's sort of like, we do need that national state finance building conversation more broadly. So there could well be learnings from some of the conversations that are happening in Canada, the UK approach as well.
Because there could be a potential solution or solution set out there that we just haven't sort of brought to our shores, if anything. And I wanted to sort of maybe get a picture, if we fast forward to the back of the Senate inquiry, ideally, what are the results or outcomes that we're hoping to see on the back of this, apart from the obvious one being, increasing levels of home ownership? And
so I don't think there's any one thing that is likely to solve where we find ourselves at the moment. What we very clearly want to see is recognition by government and all key stakeholders across multiple levels of government of how critical mortgage brokers are in finding solutions to help people into homes. And their role in doing that needs to be recognised. And where there are barriers or opportunities to improve regulatory settings for the benefit of consumers, okay, that's the most important thing. They really need to be looked at. And importantly, it's very much a case of where we see potential where regulation is actually going to restrict a consumer's access to go and see their broker. We really need to pause and think about that, because I think that's going to do damage to access overall. This is a long journey. We know that Senate inquiries can take a very long time to go from inquiry to report to recommendations. If you think about, Murray's FSI inquiry, when was that? Early 20s, 2000s.
2019s,
Yeah, so that, that is a report that started, and now we find much of that regulation actually in place now. We've got to have a seat at the table. That's the most important thing,
of course,
in my perspective.
Yeah,
it's definitely important to have those open and transparent conversations that make it more accessible for everyday Australians to get access to financial literacy and seek out the help of financial services professionals as well. I suppose, Ray, maybe a question for you. How do you sort of see these conversations benefit the likelihood of making home ownership a reality for everyday Australians?
Look, I think some of the initiatives that Anja's mentioned is fantastic. They will definitely go a long way. But I think personally, I think there could be further done, more can be done at that end, perhaps looking at what Anja mentioned, downsizer contributions, perhaps reducing some of the age category from being 55, 60 to perhaps a little bit lower to see if more can be done at that space. Increasing some of the contribution mechanisms. Currently with the First Home Super Saver scheme, it's limited to 15,000. That could perhaps we could look at some of the catch-up contribution provision, which means if someone hasn't made a total contribution off that amount over the period of 5 years, perhaps utilising that and creating a bit of a tax deduction strategy at that front, which will not only help them reduce taxes, but also be able to build up a good amount of savings utilising First Home Super Saver Scheme.
Yeah, look, there's a sort of myriad of strategies to achieve a goal of home ownership. But I think what is important is that they seek out the help of a financial service professional to discuss strategies that are relevant to their personal situation as well. So if anything, it's just all about, getting easier access to the mortgage brokers and financial planners of the country, and then finding out what strategy or what information is pertinent to them as well. So look, Anja, that's part one of our two-part chat. I really appreciate you for donating your time and talking to us. We'll be seeing you shortly in part two.
Thank you. Thank you very much for the opportunity.
Thanks, Anja.
The information provided in this podcast is for general information purposes only and should not be considered as personal advice. Always consult with a qualified professional or expert in the relevant field for personalised advice tailored to your specific situation.
If you enjoy the content we bring you on the Wealth Guide podcast, we'd love for you to subscribe and share with your community. Let's grow this community together and make financial literacy accessible to all.